The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to do a little bit different show today. I wanted to go over the DAX and the FTSE. Of course, you can see there's a little bit of pressure to the downside. Nothing really dramatic as of yet. It could increase, of course, but right now that's all it looks like. I've also posted the chart, the long-term monthly chart of Amazon, and the reason why I'm bringing this up is if you think what's going on in Washington, D.C. about the Putin thing with Mr. Trump is really exciting, you should see what's going on at Amazon, folks. Many years ago, probably 12 years ago, my dear friend Mark Douglas was living up in Scottsdale and lived on a lake there, and there was a young man that lived right down the street from him who was one of the first 10 employees that was ever hired by Jeff Bezos, a young man from Czechoslovakia, a really bright fellow. He had a little 4-year-old daughter who was a true savant. Anyway, we would go for holidays and they would be there with us, and he would tell us about the culture at Amazon. And one of the things that you did not want to have happen when you were at Amazon was to get a private email from Mr. Bezos himself. It was called being Bezoed, I think is what they called it. Well, he had moved there from the home office in Scottsdale, setting up their big center there that they have running. But he and his wife hated Scottsdale. They hated the weather. They hated the culture. They hated everything about it. And they were there for like 3 years. And finally, he couldn't get transferred, and so he quit. And 2 days after he quit, of course, he got a letter from, a phone call from Mr. Bezos saying, you're coming right back and you're going right back to work. We're going to give you a big promotion. And he's still there to this day. But he was really, really amazing. So with what's going on now with this Prime thing, I can imagine, all heck is breaking loose over there at Amazon because they really don't like to see, cracks in the cement, and that's what's going on. Whether that means a whole lot or not, I really don't know. I'm going to change the show just a little bit. I've had several people ask me how I ever got to Tucson, Arizona. It was a very long story, but I have a cousin that lived here, my cousin Bob, and he was a structural engineer for, I can't remember the name of the company up in San Francisco, and he moved here and he traveled all over the world, and I come to visit him. And also Walt Bresser lived here, and Walt, being a cycle guy, was a very dear friend of mine, and I would come over to visit him. And then, of course, my second student that I ever had was Jim Carton, and he also lived here. So I had a real strong affinity to the desert. And one of my favorite actors, who was one of my customers at Drexel Burnham, was Lee Marvin. And you'll probably remember him from Cat Ballou, which he won Academy Award for. And then, of course, he was the drill sergeant in The Dirty Dozen, plus a whole lot of other things. Anyway, he actually passed away here in 1987. He was only 64 years old, I believe, but really super nice fellow. But that's how I really got here. But the chart that I'm posting here in the room here, I just wanted to tell you what happened during this time when it was Bechtel. Thank you very much, Mr. Z. You're very right. It was Bechtel. Doggone it. That's very good. Boy, you're right on top of the game. Anyway, that's neither here nor there. But this is I got here in April of '94, and on Christmas Eve, New Year's Eve, they had a party at the university, and I was invited because I was friends of one of the professors there. There were about 100 people, and I sat next to a lady. She was in her early 80s, and this was 94. Yeah, it was December of 1994, and they set me next to her. And she said, I asked to sit next to you, and I said, oh, I said, thank you. And I said, what's your name? She said, well, my name is Peggy Hitchcock. And she says, but I have a really strong interest in astrology. And now you wrote a book about astrology. And I said, yep. And she said, my grandfather, was really big into astrology, and his good friend was also big into astrology. And this was going, and I said, well, and I said, what era was that? She said, that was in the 1920s and 30s. And I said, well, who was your grandfather? And she said, Andrew Mellon. And I said, and who was your father's friend? She said, J.P. Morgan. And I said, I'm saying to myself, oh, brother, what have I got myself into? Anyway, I started chatting with her, and she told me her name was Peggy Hitchcock Mellon. And she had gone to 7 universities, never graduated from anything. She spent her whole life learning how to spend money. She had a trust. She was part of the Mellon Trust that finally dissipated, I believe, in 2000 when it went to the great-grandchildren. But folks, you're not going to believe this. Every month, she would get a check from the trust for $670,000. That's what her monthly stipend was. So you can eat out a couple nights a week on that. But anyway, we chatted and we got along really well. And she sort of befriended me. And she loved to play bingo down at the casino with a couple of her friends. I mean, here's a woman that goes down there in a Rolls Royce. She has a chauffeur. She has a bodyguard. She has a maid, and she has a cook, and she lives in a huge mansion on the east side of town there, about 9-bedroom place, and lives alone, but was married like 5 times, but just a really, really, really nice lady. For some reason, she befriended me, and anyway, she was a friend of Stuart Udall, who started the Stuart Udall School of Management here at the University of Arizona, and they made a phone call, and so I got to speak at the university, and that led to another speaking engagement at USC, and then another one at Pepperdine, and so it was really great. But what she did, she gave me a $100 bill signed by her grandfather, Andrew Mellon, from 1929. It's a gold certificate. I still have it. I show it whenever I give, live presentations. I take it with me, and I show the folks what was going on, with them, with her and how I met her and everything. Anyway, she passed away, probably 10 years later, I believe. But it was really nice knowing her, and I got to go out to the mansion a couple times, and we'll see how things, it was just really great. I mean, it was just fun meeting her and everything. But the reason why I bring this up is because in 2000, I was asked to speak at Pepperdine University. I'd spoken at SC in 1999, and a couple people from SC, being in that LA area, Pepperdine's out at Malibu, they asked me to come and speak at the university. So I did, a graduate class. And there were several people in the graduate class that were adults, and they were on the Board of Regents at Pepperdine. And so they asked me to come back and give a private speech to their investment group. And so I did that about a month later. This was now we're into April of 2000, and this was after the top because we topped on March 24th. And I was there trying to defend technical analysis, and I was showing them, what had happened in previous markets, and one thing led to another. And anyway, I'll get back to that story. We'll finish that up. We'll get into these other markets a little bit later, but it'll be an interesting to walk down memory lane here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I'm finishing this story of moving to Tucson and everything and meeting Peggy Hitchcock. But I was speaking at Pepperdine University in April of 2000 and trying to show the technical nature of what was happening with the market in the dot-com bubble. The problem was the people that were running the Pepperdine Foundation were all fundamental folks. And the problem was they didn't believe in technical analysis at all. I tried to give them some ideas, but frankly, they had no reason to do that. And so I said, well, to stop and think a minute, what would happen if the market did start down? I mean, what would be your strategy? He said, we'll be looking for buying opportunities. Well, you know, the market dropped 85%. Well, what I suggested to them is that if the market, you know, went below the lows of March, and we topped on the 24th of March, and if it went below the lows of the 1st of March, that would be the first sign that something was not right. Well, they agreed, and they said, well, we might hedge 10% of our portfolio at that point, and they did. They did hedge 10% of the portfolio, which saved them millions of dollars. But the rest of it, you know, they went down. And what happened when they got to the bottom? The Pepperdine Foundation realized that they ought to change, and they switched over to somebody else who was even worse. And that was the main thing. One of the things that I wanted to do today that I'm unable to do was when I was speaking with Peggy Hitchcock, you know, I asked her, I said, do anybody here at the university? I said, do they know who you are? She said, yes, a few people know who I am. But the Mellons of Pittsburgh is one of the richer families in the United States from the early days. But Andrew Mellon was a Freemason. And she tells stories about how she used to play in the J.P. Morgan, you know, mansion right off of 42nd Street there in New York when she was a little girl. And she said her grandfather had all kinds of really incredible books that were very, very old about ancient geometry and mathematics and stuff like that. She said things I was never interested in. But if you go in and Google Andrew Mellon, you'll see that he was definitely a Freemason and was very heavily involved with UFOs and some other things. So it was a strange thing, but what a nice lady she was. Very, very philanthropic. She helped the veterans. Oh my gosh, she was always doing something for veterans. charities and stuff. But only a few people actually knew that she was a melon of Pittsburgh. So that's what we're looking at. Oh, let's get to the markets here. One of the charts I wanted to talk about, because we're getting close to what I think is a big bottom here in the gold market. This comes from our good friend up in Washington. I won't mention any names, but he's one of our favorite folks. Comes down to visit us every year. Anyway, this is from the Elliott Wave, folks. You'll notice that what it's showing here is that the sentiment for gold is extremely negative. I mean, everybody is really bearish. You'll notice that the record low, which was when it was back at 1,030 an ounce back in December of 2015, and here we are almost at that same low, completing a big ABCD level down here. So we're getting close here in gold. We're trading below the lows of last week. We just posted here 1232.40. Folks, the number we're looking at is only $10 away. That could be there by the time we finish this show or before we finish this sentence. But 1220 is the 61% retracement on this move. So sort of keep an eye on it. Remember, we have some long-term objectives in silver that could be hit too, but we're getting very, very close to those numbers. So we need to pay, pretty good attention to it. Let's just get up the silver chart so you can take a look at that also and see where we are here, with the silver, because we are coming down to this level. Now, whether it's going to hold or not, remains to be seen, because we really don't know, and nobody else does either. But we're looking at the technical pattern of making it 61% retracement, and the most important thing is it's that ABCD that we talked about many times when we went up to that 1332 level, and then completely reversed, and that's what we're watching. Is that ABCD structure comes right down to 1222. We're only less than $10 away right now. So it's pretty close to see whether that is going to come to fruition or not. But it looks very, very interesting, both in silver and gold. So we want to be particularly pay close attention. What's interesting about this is that we had the solar eclipse and new moon, and that didn't even move the market at all, which was one of the first indications that there was something that was not right. And that's one of the things that you want to remember. When markets don't react like you think they're going to do, they're most probably going to go the other way. And that's primary thing to remember when you're looking at some of these things. Now, another thing that I tried to show those folks when I was at Pepperdine was there had to be a spot, because I know they were all fundamentalists, and it was really difficult because most of them didn't even know what a chart was. Remember, that was 18 years ago. So until Dr. Lowe wrote his book in 2003, charts were considered eye of Newton, toe of frog. But if we take a look here at IBM, just look at IBM. IBM, folks, we've been in a bull market for many years here. Do you realize that IBM topped in December of 2012, 6 years ago, up at $216 a share? And it's been going down ever since. So you have to, at some point, you've got to be able to pick a spot where you have to get out. One of my saddest things that I had happen to me here in Tucson is when I first moved here. I had to get a new doctor, and I got a really nice doctor. His family was part of the Portland Cement family. They had a big operation here in Tucson because of all the sand out here in the desert and the building going on up in Scottsdale. And they were bought out by Enron. And when Enron dropped in half, when it got down to $50 a share, that was every time I would go in, he'd always ask me about what I thought of the Enron. And I said, look, if it gets below $50 a share, I said, it's got a big problem. And of course, it went to 50, and then it went to 30, and then it went to 20. Do you know that he would not get out of it because it was a family business? He wrote it all the way down to zero, and it basically destroyed his whole life. He ended up not ending up very well at all, and in fact, he took his own life, but not because of the money. It was because of his health. But well, maybe it was related. I don't know. But there's got to be a point where you say, well, maybe there's something not right with some of these things. We've seen this with the WorldCom. We saw it with Global Crossing. So many. Well, look at Madoff. I mean, there's always things out there. There's got to be a spot where you have to say uncle, and that's the thing that Mark Douglas, when he interviewed all these big traders, they knew what that level was. That was where their that were the point of no return, where they said, okay, this is no longer feasible. We see on TV when we watch Bloomberg and CNBC, these guys like David Ackerman and some of these other guys, Jim Chanos, who's been incredibly bearish, Tesla for 4 years, and he's still bearish. And there's nothing, hey, he could be right. I'm not saying he's right or wrong, but he has a plan. And the plan is that as soon as if they start making money, he said he will start covering his shorts. And, whether that'll happen or not, I don't know. But there's got to be a spot where you say, okay, this is your choking point or whatever it happens to be. There's got to be that spot where you say, this is it. Can't take any more. And believe me, it's a relief, because what will be happening is you'll be able to move on to the next trade. And that's where that, the sky might open up and you could see nirvana. Who knows? 877-927-6648 if you have any calls.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I believe we have a caller from California. Daryl, are you there?
Good morning, Larry. How are you?
Good morning, my friend. What can I do for you?
Oil. So obviously, big short squeeze, and then it's kind of cracked pretty hard here in the last couple of days. It's sliced through its 61% retracement yesterday or the day before, and now it's coming down. I wanted to see what your thoughts were there, and then if you could just briefly touch the the S&P since we've kind of rolled over a bit, but I don't know what you're thinking there.
Okay, well, let's take a look at the crude oil first. I'll put up the 4-hour chart. We had a 382 retracement last week up at that 71.50 level. We've now broken down below 68 substantially, and looks like to me we're heading towards 65.60, which is the 78% retracement from the low we made in mid-June. That's also a perfectly equal retracement that we had between May and June. If you take a look at the charts, you'll be able to see that that lines up really nicely. We're only a buck away, so the fact that it's coming down this hard makes me believe that that's most probably what we're looking at in crude oil. You know, it's been quite bearish with the divergence that we had between crude oil, gasoline, and heating oil, with the gasoline and heating oil not making new highs, only making 61 and 78% retracements when heating oil, when crude oil made a new high. So that was the first indication, that was happening. But I think about another dollar lower, we should get a pretty good bounce, and we'll see where it goes from there. If we take a look here, now you wanted to ask about the S&P.
You said 65.60?
Yeah, 65.60 is the 78% retrace. That's in August crude, WTI, West Texas Intermediate, and that would be equal to the move down between May and June and July. That would be equal move right at the 78% level.
Perfect, thank you.
Okay, now if we take a look at the E-mini S&P, one of the things that we focused on in the newsletter this week is coming in Monday, we were going to be 11 days up, and as you can see here, over the last 6 months, we've had 4 instances where we had 11-day runs. Those are 11 trading days, by the way, and each time we had 11 trading days, we had a minimum of a 10% correction, and since this one is coming in near the highs that we made back in March and June, and again in July, we'll most probably see something a little stronger. My guess is there should be some pretty strong support around 27.26, which will be a 61% retracement of the low that we made, back on, June 28th. But right now it has a slightly bearish bias.
Perfect. Thank you, sir.
I hope that helps.
Yes, sir. Thank you.
Yeah, thank you very much. Anyway, let's move on here and take a quick look at something else that we want to be chatting about, and that is hold on, let me get it up here so we can take a quick look at it, and that is the euro. We've been watching this. Yesterday we were expecting the euro to get up to that 78% level, up around that 117.30. We got as high as 117.45. We're now 50 pips below that level. It still tells us that we're heading, closer to a downside. And then we'll be able to see if that's going to be the case, and we'll be able to see if that is going. Hold on, I got to do something here, and then I got to put an order in, and then I'll be right with you. Okay, and then anyway, we'll be watching this. Hold on just a second here so we can see. Oh dear, I got to do 2 things here, boys and girls. Bear with me 1 second. I'm not able to walk and chew gum at the same time. So if you'll give me a second, that takes care of one thing, and there's a second thing. Okay, I'm free right now, and then we're ready to go on. The question about the gold and silver, excuse me, folks. The gold and silver, we're there. I mean, we're only $10 away in the gold. So we've been waiting for 12.20. I mean, it's almost there. Might not hold it, but that's the big ABCD off the 382. The silver is trading, substantially below $16 now, and believe we're quite a bit below that. And we only got 60 cents to go to make $15 silver, which 15.10, which would make us 78% on the long-term weekly. So, pay really close attention to that. Remember, I showed you that Elliott wave thing, that the fact that the silver and the gold the silver is the same as gold as far as open interest and negativity, but the negativity in the gold market is as bad as it's been since the bottom when we were at 1,030, and we're still 25% higher in that. So I still think we've got a chance here for gold to be turning. So it'll be pretty good to be watching to see what's going on, with that. Whether it'll happen or not, we'll have to wait and see. We've just been alerted. One of the things that I was just watching here is, if you'll pay attention here, this is something that we talked about on Monday's show. This is the Australian dollar, and you'll notice here that we're getting up here really close to that 135 pattern in the Australian dollar, up around that 75.25 level. So that's another one that looks, real interesting because it's in a downtrend. It's completing ABCD patterns. Whether it's going to change anything or not, we really don't know. But at least that's what's happening to it right now. But that's the main thing. Let's just double check the last price on that Australian dollar and see how close we are to the actual number. And I don't think we're too far away. Well, we're still quite a bit of ways on that one, so we got more time to wait on that. As far as the euro, we hit a high of 175.35 last night. We're trading 165.95. We're down about 40 pips. There should be some pretty strong support at 116.70 in the euro, but as we mentioned in the newsletter and also on Monday's show, was the fact that the dollar index was poised to really get moving, and it doesn't take much. If you take a look at this dollar index chart, it really doesn't take much to get this thing above the 95 level, and above 95, I believe that U.S. dollar index is going to start rocking and rolling. And the reason why I say that is if you look at it real closely, you'll notice that we've been in a really tight consolidation here for a month. We haven't gone up, we haven't gone down, and that is high-level consolidation, boys and girls. That is not a bearish pattern. We've seen this in too many charts where it goes up there and it looks like it's making a major top, and yet it doesn't go popping through. And if we do get above it, and we have to get above it, we got to get strongly above 95.50 in that U.S. dollar index for it to be a breakout. And then you've got something to, the people that were up there, all those people selling are going to probably have to start to cover, and you're going to get one heck of a move. That'd be equivalent to the euro going below the 116 level. We're trading at 116.95 now, so it would take a big move. But, we see moves like this going on. And with the news the way it is, coming out of whatever city anybody's talking in at that time or what everybody's talking about, anything can happen, and it usually does. So pay sort of attention to that, because those high-level consolidations, when they happen, they're very, very powerful. And this is one of the things that we're seeing what's going on with that. You're right, Gator. It is completing that point D on the 120-minute on the dollar index. That's why it looks so interesting, because if it can get above that 95.50 level, it should have legs. And maybe it'll fail there. Maybe it'll be a false breakout. But, I would wait and see how it acts, because if it's strong coming out of that, means it's got a long way to go. And that means the euro could be heading down to par, which is our, 108 is our long-term objective. 100 is our long-term objective.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I wanted to just talk a little bit about the euro. But before I do that, I wanted to mention, when I was at Drexel, I had clients that were celebrities, but I didn't know a lot of these people. I had I ran their business through Lewis Bernstein and Associates. That's how I operated. But I never really met Lee Marvin. I mean, I was a big fan of his, and I know he passed away here in Tucson, but I never really got to meet him. Richard Boone, who lived here in Tucson at the same time, was also a customer. I never met him either. So there were a lot of those people that I did business with that I actually never met. Some of them I, of course, did, but most of them I had met they would come into the Drexel office because that's where their stock and bond market was. And some of them put money into commodities and especially gold, because that's what I was doing, was just basically gold and silver when it was going up, pretty hard to screw that one up. And I was lucky enough to get out at the top, I didn't get out the top. I got out $200 below the top. Anyway, if we take a look here at this euro, we were looking for it to rally. We got right up to that 117.40 was the high, and now we're looking to come back. Clint Walker, yes, he lived in Westlake Village, and he went to St. Jude's Catholic Church. He was a very, very strong Catholic. And I did know him. He never had any children, but he was a really nice guy and did a lot of things for St. Jude's Catholic Church there in Westlake Village. But really nice fellow. And I don't know when he passed away, but he was not my customer. He just happened to live in that area. I met him once or twice at a function, but that was about it. So not too much there. Okay, let's move on to some of these other charts that I wanted to cover. The British pound, folks, we've had that rally that we're looking for, the British pound. We got up to that 133 and change level. That should be it. Theresa May evidently is under a great deal of pressure, much like we're seeing here in the United States. So all that'll probably pass over, and there'll be something new coming out in the next 2 or 3 days that'll change the scenario of what's going on, but we'll certainly get a lot of things. I want to talk about Bitcoin. We've had several people ask about this. I'm doing my very best to have John Jameson as my guest later this week. It'd probably be next week, would most probably be my best guess. And but we'll try to get this on. But this is Bitcoin since it started trading on the Merc back in January. It gave up about 65-70% of its value from 19,000 down to 6,000. Folks, Bitcoin has gone through, since 2010, it has gone through 4 better than 80% corrections from any level, whether it was $300, $5,000. It's given up over 80% each one of those, and that's what we're doing right now. This is not a bubble type chart that we're seeing in these cryptocurrencies, in my opinion. It is really, it's really not that. I mean, it's just a normal. There's a very strong ABCD pattern fulfilling around $3,800 per share in Bitcoin. That's going down to that 2010 low to the high we made in January of this year. And that would come in, very well. We're down 6 months, so we're going to be down maybe 6 or 8 months. We'd probably be looking sometime in late summer, early fall for a potential buy in these cryptocurrencies if you're interested in them. But something is out there. This is not a bubble. Doesn't look like the bubble that we had with the dot-com bubble or the tulip bulb mania. The tulip bulb mania, that's going back into the 1700s in Denmark. But anyway, we'll keep following it. But there's a big ABC there in the Bitcoin at that $3,800 to $4,000 a share mark. 1 second, please, and then we'll be able to look at that very, very closely. By the way, on a programming note, I have received from one of my customers, a dear friend, an incredible gift that is going to cause me to probably miss a few days' work. He gave Sarah and I something really special, and we're going to have to take a small trip to enjoy a wonderful train ride and go out to an incredible dude ranch. And so I'm probably going to take a few days off. When it's going to be, I'm not sure yet, but it's what they call a once-in-a-lifetime opportunity, and it was on my bucket list, so I certainly want to be able to do that. But that'll be coming in the next week or so, hopefully, and we'll be able to see it. Yeah, it'll certainly be a lot of fun as we go through. Someone's asked a question about if Peggy Hitchcock actually did any trading. No, she had absolutely no interest in the stock market at all. In fact, she joked with me several times when I would visit her, and she had a beautiful art collection, which I have about zero interest in art. And she said she spent her whole life. She said it took me 12 years to get through college. She said she went to 7 different colleges. Four of the colleges were the Heavenly Seven. She had gone to Mount Holyoke, Smith, Vassar, and one of the other ones, and then she went to a couple others. How she got to Arizona was she was really interested in astrology and Indian lore, and that's how she got out here. And she was a friend of the Morton Salt family, and they had a big mansion out in that area. It's the east end of Tucson, out near the Rincon Mountains, where the big mansions are. Paul McCartney has a home out there, as well as several of the New York families of the Italian family fame out there, the Bonanos and the what was the other? I can't remember the other name of the family that live out there. But anyway, those are huge mansions, and it's out on a dirt road. It's really quite remote, but the houses out there are really, really unbelievable. The Firestone family lives out here also. I mean, just quite a few old money. The Wrigleys have a place here, the chewing gum people out of Chicago. So that's the kind of place that they stay in. And they mainly was because of the weather. And I don't know if you folks know this or not, but John D. Rockefeller lived the last 10 years of his life here between 1930 and 1940. And I believe he died in Florida in 1941, but he left the University of Arizona a huge amount of money for medical research. And that's why our medical school here is such a premier school, because they were not allowed to touch the principal for, I believe, 50 years. And, that was at the time when interest rates were, 13, 14% during some of those years. So they did pretty well. So we'll see what's going on. Well, I've rambled along enough today, so I hope I can answer some of these other questions. I had one other question about the gold market. Would I be a buyer down there at 1220? Yes, I will be a buyer at 1220. I would risk around probably $12 a share. But it looks like we're getting very, very close to it. And it may or may not be the bottom. But that's pretty much it. Another question that someone's asking is about the grain. Have we made a bottom? I'm not sure. All I know is we had a 35-cent rally in beans off the bottom, a 10-cent rally in corn. Those rallies should hold, but if they don't, you have your stops under those lows where you don't have to risk very much. Just be a few $100s on beans and probably $200 on corn from these levels. So that's what's going on. Yes, the Federal Reserve Chairman Jerome Powell is speaking. He could be talking at any time, and whether that'll move the markets or not remains to be seen. Let's just check and see if I can find out what they're doing. They had a little bit of a sell-off. Now they're bouncing back a little bit. So there's no panic going on in the stock market under any stretch of the imagination. We almost went below $67 a barrel in oil. Remember, 65.60 is the number we're looking at. for potential. Watch the Treasury bonds here, folks, because we're making a nice Gartley up here at the 145.12 level. 877-927-6648.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart of the 30-year Treasury bond, making that retracement that we looked at yesterday. It dropped a little more than $1,000. It rallied back about 500. But if you recall here, we were also watching the German Bund over the weekend too, because it really had an really interesting pattern, and that also broke quite a bit. So these interest rate futures should start to go lower, i.e. higher interest rates. That's what it's looking at as we watch it here this morning. So that's really what we're looking at. Someone's asked a question on the euro. What happens if the euro gets above the 117.40 level? That would be friendly. That means that pattern would no longer be valid, and that happens all the time. I mean, you have to be expecting that these markets do not always, move in the direction that you expect them to do. But if they do, keep a pretty good eye on what we're looking at. Now, this morning, the November beans just made a 38% retracement of the low that we made yesterday. We're down around 826. We rallied up to 858. We backed off exactly 18 cents to the 12 cents to the 46 level, and now looks like we're getting ready to move higher. Another market that's looking extremely friendly, folks, is the dollar yen. In other words, the yen, moving in the direction. Let's just get this up here to let you folks look at it, because we've been up here for 3 days now, Friday, Monday, Tuesday, and the market has not backed off at all. We're right near the highs now. We're up around this 112.75 level. Getting above that, I mean, it's in, you're basically heading up. We could only back off 60 pips from that 78% level. So that's telling you that this looks awfully strong. Whether that'll move the market or not, I don't know. We've already moved 40 handles off the bottom in the NASDAQ since we've been in the last 10 or 15 minutes. So there's a lot of buying coming in some of these. So pay attention, So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!